Greetings, members one and all of the Salivation Nation. Is the gold to silver ratio about to tighten up within the next year or two? We'll explore that and find out. And also, why are agents of Kitco Metals saying that there's no urgency to jump into the gold market? We'll explore that and palladium and why it could go higher right now. Yes, this article comes to us from thestreet.com, and this is an interview that was done by Kitco, and they interviewed the global trading director of Kitco Metals, Peter Hugg, and why he says there's no real urgency to jump into the gold market right now. It says that besides the Brexit deal, there are a few catalysts to push gold up in the short term, said Peter Hugg, who's a global trading director at Kitco Metals. There's no real urgency here to be jumping into the gold market. I'd like to see gold close above $1,322 before I initiate another long position, Hugg told Kitco News. Hugg noted that although the Fed's latest dovish stance could weigh on the dollar, which would be gold positive, it could also drive capital back into risk assets like equities and away from gold. The Fed's meeting last Wednesday removed the possibility of rate hikes in 2019, while growth forecasts from the world's largest central bank were lowered. I want to see where the capital flows. If it flows into risk assets, the stock market, that could put a little bit of a roadblock on gold in the short term. So the key now is the dollar. On palladium, Hugg said that supply and demand fundamentals are in line to drive palladium and rhodium prices even higher. And rhodium especially, well over $3,100 right now. And we'll take a look here at the major prices for the precious metals at the moment here. But it is very interesting to see how palladium and even platinum is going up as well too. But as he said, the dollar is the key. And he said that's kind of one of the major assets that's not having that much of an effect, or that could be the unpredictable factor in where gold is. But he doesn't really see anything, as he gone into detail in the actual video interview, that other than Brexit, and that looks like that would possibly be delayed till June, when that actually occurs. A lot of this stuff is kind of baked in. You kind of know what's going on. Same thing with the trade deal with China. More than likely, there's probably going to be a deal struck within 30 days with trade with China, and both sides will be clamoring for succeeding in the goals of each nation, both China and the United States there. And I believe we're kind of seeing things subside there. So that's having an effect on the metals, keeping them sort of flat and going forward. And we'll see where that lays out. But, Hugg doesn't see gold really having much action from where it is now. So we say it might not be a bad idea to kind of hold off for a while and buying. He thinks palladium's got more room to run, and it's strictly a supply-demand equation. Also, something to consider, too, that he doesn't mention is the recent strike that is occurring. He says there's some jawboning that Russians may be withholding palladium from the markets to try and squeeze the market even higher. Much easier to do with a metal like palladium and, to some extent, platinum, because those metals are essentially only produced in two places for the most part, for the very most part. As we've cautioned over the past 2 years, we've been extremely constructive, the palladium price, ever since $800. Hugg added that investors should be aware of the volatility of the palladium market and the possibility of a $50 to $70 moves in corrections, as is very volatile. Those would be considered investment metals and highly speculative. We're at all-time highs, but if we get above $1,600, which actually did get above $1,600, and if it holds for any length of time, $1,700 to $1,800 is certainly in the cards. And it did flirt with that for a while, but then it kind of pulled back. What he did talk about in this interview that's not in this article also is copper prices. And copper prices, there is some bullish sentiment towards copper. And by the way, I do consider copper as money. It has been used as money for thousands of years, just like gold and silver, but especially copper in day-to-day transactions. But notwithstanding, it's not a precious metal. There's a lot of it out there, and the sentiment of its bullish is basically because of its use in industry and other areas. But because of that, because of the demand, to see where that is, what about silver? Silver is a byproduct of other metals, including copper. And that could be one of those things where we might see this price of silver fall closer in line with the movements in the copper market. And if that happens, then we could see the ratio between gold and silver tighten. Because gold and silver, they are metals where silver usually follows gold. But that push from the copper side could have an effect on silver, a much stronger effect maybe than copper. So we'll see how that plays out. But that's one way that we could possibly see within the next year or two the tightening of the gold and silver ratio. But I don't think it's going to be by much. Let's take a moment and explore here the gold and silver prices and where they stand as of the recording of this video. And it looks like that they are down a bit. The sentiment is down for all the metals here a bit, but not by much. It's not fallen by a whole lot. Gold is still holding steady well above the $1,300 mark. It's at $1,316.37 there. Silver's down a dime, and it's a much more volatile. It's a bigger drop in percentage wise than gold. Platinum is down $1.50, very small movement down to $860.99 an ounce. And palladium took the biggest hit today at $1,546 an ounce, down negative 2.37%. So there's where those metals are, and we'll see how this all plays out. But there's different factors and different ways I think that ratio could tighten up. But probably the biggest argument for it, not to say that it will happen, but I believe if you see other activity in the markets with production and demand for copper, more than likely, probably on the industrial side, we'll see more demand for silver as well. And if that does happen, then the price could potentially go up, but not by much. And again, I don't think that ratio is going to tighten up to some levels where we all think it should be. And I also don't think we'll ever see the ratio get to anywhere where the natural mining ratio is. Some of the mining ratios say it's between 9 and 15 to 1. I don't think we're ever going to get there because the metals, gold and silver, though, they're the ones we most concentrate on. They're still different enough. Gold's use in electronics and in industry is noted and is well established, but most of gold is treasured. And that treasure of gold and silver means that it's going to be more stable in its value as a hedge. Silver, on the other hand, is a metal that is also treasured, but far less, and it has got much more use as an industrial metal used for technology, industry, and the biomedical fields. It is a very versatile metal. It is quite fascinating how it's used in those areas, and we're mining more of it. And we're mining more of it, especially as a byproduct of other metals, more so now based off the recent video that I did with the USGSS number, where there's less silver being produced as a primary agent, but more of it filling in that gap and increasing supply as a byproduct. And hence, because of that, and if an increased demand happens in that sector, then we will see that ratio tighten up. Now, I say that with the caveat that perhaps in time, and given how the economy is right now, many people are thinking that within this year, we will see a softening of economic growth. And potentially in 2020, we could see potentially a recession or some sort of economic downturn here in the United States. And our economy is doing fairly well by a lot of measures, but on the same time, people are seeing cracks and notices, things like the bond yield inverted curve that we've talked about recently. other things that are occurring, such as potential with housing, the housing market, seeing a possible downturn in the housing market. And that's something to be very cautious of, because that's what led to the last recession. And a lot of things really haven't changed since the last housing bubble that popped. And but the other thing too is even though that's the case, the economy of the United States still is the strongest economy in the world, and other economies in the world aren't doing so hot. Chinese economy is something to look out for, because that's where you're going to see a lot of silver usage in electronics and manufacturing and the like. And if there's less demand for electronic devices, that means less silver is being used, less copper being used too, and that could mean a downturn. Or potentially tepid silver prices and tepid copper prices. But the fact that some people are speculating that copper is going to go up, more than likely silver could follow. We'll see how it all plays out. Post your thoughts below. Would like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and share again. And then maybe subscribe at the very end of that. It just as an afterthought.